Hey everybody, I wanted to thank you today for coming on to have a little bit of a conversation. I had the opportunity to get 4 leaders in the mortgage industry together from Pennsylvania all the way to Florida, and to say what's going on in their areas, how it affects the consumers with the market that we're in today. And I'm going to introduce myself. So if you don't know me, I'm Sue Meitner. I'm the president of Centennial Lending Group, which is a subsidiary of Success Mortgage Partners. And how about if I have each one of you introduce yourself and tell everybody where you're from.
My name is John Hinks Jr., and I am a producing branch manager out of Columbia, South Carolina for a company called Lending Path, and we are also a subsidiary of Success Mortgage Partners.
I'm Kristin Jamieson. I'm with Success Mortgage Partners out of Claremont, Florida, which is basically west of Orlando, just a little bit.
Hey, and everybody, my name is Craig Bland. I'm with Success Mortgage Partners, and I run a branch in the state of Georgia, and it's great to be with you all today.
Well, I have lots of consumers who have asked questions from all of us, and I think if we just jump right in, we'll be able to get the biggest impact and get their questions answered. So the first question I have is, we were actively house hunting when all this craziness started. Should we wait? And so, Craig, why don't you jump in? Do you think people should wait to buy a house?
You know, no, I don't, is the easy answer to that, because there's never a right or a wrong time. There's only now, and it's going to be an ongoing, changing landscape that we've got right now. So what I would say to people is, if you haven't already spoken to a mortgage bank or somebody who you trust in the mortgage field, speak to them quickly. Find out where you're currently positioned when it comes to buying a house. If you've already been pre-approved or you have a letter in hand from your lender, I would also suggest just circling back with them and maybe having them look at your file, make sure that you're still qualified based on some of the new rules and regulations that are starting to filter into the marketplace.
Right. So, Kristin or John, why would they need to reconnect, do you think? What are some of the changes that you're seeing with your consumers with regards to FICO scores and debt to income ratios?
We've definitely seen in the government market, so your FHA, your VA, or your USDA loans, we've definitely seen tighter restriction requirements. So 10 days ago, we could have gone down to a 580 credit score for 2 of the 3 of those loan programs. And today we're now at a 660. And unfortunately, it didn't matter where any of the clients were at in the process. Once the guidelines changed, the guidelines changed. So it is inhibiting things a little bit. They've also tightened up a little bit on debt to income ratio requirements. Historically speaking, those loan programs are pretty forgiving and allow people to finance more than say a conventional loan. So we've seen those tighten up as well.
So what the consumer might not realize is that we all run, every mortgage company, whether you're at Success or not, runs your loan through an automated system to get an approval. And then that is what indicates what we can do or can't do. And we're seeing that those tightening up at the same time. So just getting an updated approval or pre-qualification is a great strategy right now.
But once your updated pre-qualification is out, I mean, it goes back to the original question,
right?
Should you wait? Well, if you are still a qualified buyer after you've revisited your mortgage loan officer, well, in a matter of 3 weeks, we've went from a seller's market to a buyer's market. Right. So a qualified buyer right now is a little bit more of a rare thing. So the sellers are also being educated by the same things we're talking about right now. So they're going to be a little bit more open to, now's the time to buy and now's the time I better try to go ahead and sell. So yes, you definitely, if you're a qualified buyer right now, I think now's the time to buy a house.
Yeah, I definitely agree. I think that especially with people being in their homes, people are going to possibly want to move. So that will be a good time to take all of this to the next step. So if you're actively looking, you should continue to actively look. So the other question that we have is, now a good time to refinance, and how might that help me right now?
Several reasons to refinance right now. You know, when you look at a refinance, you can look at what your cash position is, how much monthly savings does it, you know, how much will it save me, you know, per month, or how much interest do I have to pay for the rest of the year? A lot of folks are refinancing as long as it's a good net tangible benefit for them, is they're using the time to close in a certain time of the month and roll in that month and have a month skipped.
Skip a mortgage payment. So instead of forbearance, skip a month's mortgage payment by refinancing.
That's never a good reason to refinance, but
Right.
it is a little convenient at the moment to refinance, to kind of just stockpile a little money to the side, which could help. But the rates have never been lower in the conventional world. It's still an amazing time to refinance.
I agree. And especially with everyone's equity, most people have a lot of equity in their house. Are you guys seeing that in the Georgia and Florida and Carolinas? I mean, that's what we're seeing up north, is that people do have a lot of equity. So they're able to really look at their financial positions and figure out how they can really capitalize on that equity. Are you guys seeing that in your markets too?
Yes, and not only am I seeing that, when we run through that same system we talked on number one, I'm seeing a lot of appraisal waivers right now.
And Craig, what is an appraisal waiver?
Appraisal waivers are really handy things. And obviously, the values of homes have steadily risen over the last few years. And as a mortgage lender, you mentioned automated underwriter a few minutes ago. Somebody mentioned that. When you run your file through the automated underwriting system, and there's 2 or 3 of those systems, but when you run it through the automated underwriting system, the system will say, hey, we believe that the home is worth what you've put in there as your estimated value. So with that being the case, you do not need to do an appraisal. That's a nice saving. That can save $500 or so for most people when they're looking to do an appraisal. The other thing, right now, appraisers are struggling to get into people's houses. So if we do get an appraisal waiver on a file, it just makes our system of progressing it through the system a lot easier.
Correct. Kristin, are you seeing appraisal waivers in your area? How is that
Everybody
working?
hates Florida. Nobody likes to lend in Florida. However, I did actually, I did 2 cash out refinances today and got appraisal waivers on both of them, which I've never ever seen before. So I think secondary market investors, or our Fannie Mae's and Freddie Macs of the world, are starting to take Florida more into consideration. But
right.
I'm seeing more than I ever have, but I still don't think we're getting as many as some other markets that aren't predominantly second homes and investment property communities.
Right. And in those 2 situations for cash out refinances, or any of the cash out refinances, what would you say is is now a time to cash out some of your equity? Like what would some of those reasons be? And is it a good time? It was leading me right into my next question about cash out refinances. So thank you.
No problem. So I do think doing a cash out debt elimination, debt consolidation, however you want to word it, with rates in the 3s, even in the cash out world, in the conventional world, that's free money. I can't think of any financial advisor out there that would say not to use your house as leverage to put yourself in the best financial position right now with as low as the rates are.
So I agree. I just was able to refinance someone who closed on Friday, and they were able to consolidate their debt and keep their mortgage payment the same. And they were able to eliminate over $1,200 in monthly bills, which really helped look at their complete global situation and save them a lot of money on a monthly basis. So people are able to save, if not in the hundreds, but close to $1,000 at times when you're taking the large credit card payments or even student loans into account.
You're absolutely right. Cash out refinances are a great tool, and I think people underestimate the value of a cash out refinance. If you unfortunately have carried some debt for some time, maybe on a credit card, things like that, and you've built up, and sometimes it's hard to get out from under those credit cards, and you're paying several $100s a month to borrow that money on a credit card. Doing a cash out refinance is a great way to alleviate some of those payments and lower your monthly outgoings and put you in a much better financial situation. So it's well worth looking into, and a good valued mortgage advisor is a great way to go. Just talk to them. They'll all give you great advice.
Mm-hmm. So John, how much do you need to do a cash out refinance if that's something that you are talking to somebody about?
Typically right now, for all loans, with the exception of a VA loan, it's you got to have about 20% equity in your house left over after the deal's been done. So, knowing the value of your house, say we don't get an appraisal waiver, an appraisal will be performed on your house. And when that value comes in, you can go up to 80%. So I usually just tell people, multiply it by 0.8. And then you take the difference between what you owe and the closing costs in order to be able to do the refinance transaction itself. And that gives you what's left over.
Right. So in this new normal that we live in now, will that change how you close on a loan? I mean, the next question I have is, with all the restrictions and all the offices and services, is it still possible to finalize a purchase and a refinance in each of our specific areas? Now, in Pennsylvania, we were one of the first states to be told that we couldn't work at work and we had to work remote, except for if you were essential. A non-depository bank or a bank is essential. But we had some hurdles to get through with the title companies, and we are doing stop and sign settlements so that we're able to get people to closing so that they can save money or buy their house. What are the three of you having in your area that you're dealing with right now so that people can go to closings?
So if you would like me to just respond for Georgia, Georgia's an attorney state. So our closings have to typically happen in an attorney's office and be notarized right there and then. But the governor of Georgia came out and implemented an order that closing attorneys, still essential workers, but they're allowed to now do them by video. So they can video witness people signing their closing documentation. So they're giving the option to people. Obviously, they can keep a social distance and explain paperwork easily, right, if you're in an office, but often if you're purchasing a home, for instance, there may be buyers, sellers, real estate agents. The first thing they've asked is, let's keep the real estate agents, the loan officers, anybody that's non-essential to a closing away from the closing table. So that way we've only got sellers and buyers. What I'm finding more and more is if they choose to come in and sign, they're putting them in separate rooms. So, you've got buyers in one room, sellers in another, just to keep that social distance that we're all referring to at this time. But implemented just this week, and one of my loan officers that works on my team did 4 closings yesterday, and all 4 were done electronically. So the attorney was doing a video closing just like this, watching them sign, and then they would carry the documents over to the attorney's office. They had to be with in a certain amount of time, and then they would notarize them, having seen them sign the documents.
How about in both of your respective areas, John and Kristin?
Very similar to Georgia. I mean, they're having closings outside right now, which is pretty interesting. They have a tent set up to keep people in the shade and signing their documents. I'm not sure about you guys yet, but I think they have started this week implementing e-notaries. So that's been going on. So having an electronic notary has been helpful. So that's been going on in our market. I don't know about you guys yet, but we're also an attorney state, and a lot of times what our attorneys are doing now is they're actually emailing the documents to the borrower beforehand. They're printing it, signing it, and then they're driving by the attorney and they're doing drive-by closings. So they drop the paperwork off, the attorney goes through it, signs his portion, her portion, and goes through it, notarizes it, and there you go. It's like McDonald's closings.
That's what we have because we're not an e-notary state yet.
Mhm.
So we're in the process of getting there. How about you, Kristin?
Well, we are an e-notary state, but I haven't heard that the secondary market investors are accepting
Mhm.
Right.
e-notarization yet. So we haven't seen that, or I have not seen that implemented in our business just yet. The only other thing I'd like to add is one thing that we're seeing a lot of the title companies doing. I'm not an attorney state, we're a title company state, but
We are too.
is they're sending out a lot of just notaries to people's homes. And if somebody doesn't want somebody in their home, then they're signing outside. So keeping people out of the businesses, keeping everybody obviously as happy and healthy as we can through all of this. So I agree with, no extra personnel. We've even had title companies tell people they can't bring their kiddos, which has posed some problems.
Right.
Childcare isn't easy to come by these days with all of our shelter in place orders, but if there's a will, there's a way. Closings are still happening. They're still happening under 30 days all the time. So again, there's a will, there's a way.
So the next question is somebody said, can my loan application be completed with social distance? So I think that all of us have been doing loan applications most of the time through the internet before all of this happened. So through a telephone conversation and collecting as much information up front, we don't need to actually ever see the borrower. Is that the same thing? Were your branches all doing the same thing also? Yeah. So that was a great question to possibly a first-time home buyer even, because people don't buy houses every day. So even if they bought a house 10 years ago, it probably would be different because we all were meeting people 10 years ago, even a couple years ago, we were meeting people every day. So
I never tell anybody to slough off work for any reason, but I can tell you it's actually a lot easier right now while everybody has their shelter in place orders. Normally we can't always talk to somebody between 8:30 and 5 if they're in a cubicle. They don't want to shout their social security numbers or what their monthly income may be, that, important pieces of information in our loan application. But while more people are working from home, they have a little bit more time to talk about their personal financial business and not as a secretive way. So I personally think it's a great time to get your loan application in if you have a few extra minutes during the day.
Right. I always say that people should get their loan application in, whether they're thinking of doing it in the next week or in the next month, because then you're able to go through the process and get the pay stubs, get the W-2s, get the 3 months bank statements, get your driver's license, and have all your ducks in a row in order to move and strike when the interest rate's where you want it.
Exactly. We're in a pipeline business, and the pipelines are pretty big right now with the refinance opportunities out there. So the quicker somebody can get all their stuff in, they're definitely going to be at the top of that list. Craig?
Sure, Craig.
Sue, one of the questions that I've been wanting to ask, and I thought you could maybe answer this one, is that people are showing some concern about people coming into the homes right now. It's understood, right? A lot of the areas in this country it's getting serious. A lot of people are dying and contracting COVID-19. So how are you guys in your area dealing with home appraisals? Has there been any concessions or any changes in that area?
Right. So we have been working with our investors and with our appraisers. At first, the appraisers were like, wow, we don't know if we can even work because of the orders that the state came down with a couple weeks ago. So we are telling people that if they don't mind the appraiser coming through their house, that they can keep the social distance so that they can walk around. But we also have worked with the different aggregators to see if a drive-by appraisal with a final inspection, once all of this comes, eases up a little bit, if that will be possible. And some, that is possible for some, and we're still working with other investors to make sure that we can, get that through. Get the appraisal waivers. When we get one, we're really excited about it because then we don't even need to worry about the appraisal. But great question.
Right. What about you, Kristin? Is the same thing happening in your area?
So our appraisers, I've only had one appraisal assignment declined since this has all started. I think Florida was a little bit behind the ball with issuing our shelter in place orders that we just got about a little over a week ago. But even since then, we've ordered quite a few appraisals. I haven't gotten much pushback, but again, our county, we have 100 cases. Some counties have 17,000. I mean, it's kind of, I'm sure, all relative to where
So we were in the hub of the epicenter of Pennsylvania, right here in Montgomery County. So we definitely had people who were a little worried about that, and we tried to ease their minds as much as possible until we were working with the different investors to see what strategies we could impose so that we could work through that. How about you guys in Georgia and the Carolinas?
Well, John, I was thinking about you. You're in the Carolinas, and today, as we record this, it's April 7th, 2020. Your governor only came out yesterday with a stay-at-home policy. So how do you think it's going to affect you guys with appraisers being able to get into homes?
Well, they've made it real clear. They don't call it real estate agents or real estate companies. They call it real estate services are still essential in our state.
Okay, cool.
So I'm working from home currently, but from what we understand, I mean, I've had appraisals being performed today, and talking to other appraisers, they are still, they're still able to visit the home. I have not run into it yet, but that's not to say I won't. But I have talked to other agents, and the other agents said, what they've done is, it's a quick measurement for the appraiser, and the agent has taken some of the pictures for the appraiser, but that hasn't happened on my end yet. But yeah, our governor just issued everything yesterday, so I don't think we've seen the effects yet. We might, though. We might.
Right.
I just had one borrower not want anyone in their house. That was only one out of the ones that we closed in the last 30 days.
And it's somewhat similar in Georgia too. We have not had many people saying, well, I don't have anybody that said, don't send anybody to the house. I think if you're up for sale and you want to sell your house, they understand that somebody's going to come in, and you can keep your distance even in a house, and they understand that. So good. Let me ask another question, because I got this question emailed to me earlier today, and I'll ask this one first to you, Kristin, and I'm asking you specifically first because I know you live in an area with a lot of people who are lower incomes. They're buying first starter homes, first-time home buyers. So the question is, that was emailed to me. It says, I think my job's secure, but if I lose my job during the process of buying my new house, will I lose my deposit / earnest money, that sort of thing? How would you answer that to a client calling you today?
Well, ultimately, if somebody's still in their financing contingency of the purchase contract, and anybody obtaining a mortgage should have a financing contingency in their purchase contract, that money would be fully refundable. And even outside of the financing contingency, because ultimately you don't have a job, you don't qualify. We have no qualifying income. That is definitely grounds for a lender to issue a denial. I've even unfortunately had some in the last couple of weeks that we had to deny because of the guideline changes outside of their financing contingency. And in all instances, they all were returned their earnest money deposit because it wasn't anything that they did. Force of magistrate, I don't know what we want to call it, but I do believe everybody right now with COVID-19 and job loss would be protected from that.
And the newer agreement of sales that I've seen have started to have a COVID-19 addendum attached to it that states that if for some reason, due to this current market situation, that they would receive their earnest money back.
I was just going to say that the agents in our market have a COVID-19 addendum already attached to their contracts.
They do. So that's interesting, John, because I've actually bought a house in South Carolina before, and it was somewhat scary for me because your contract is not as detailed and has got all the contingencies as we do in Georgia. So they're specifically adding a COVID-19 addendum to your contract currently?
They did about 2 weeks ago. They did, yes.
And yes. Ours was about 3 weeks
Have you seen that, Sue?
So we started to add a COVID-19 addendum 3 weeks ago to the Pennsylvania Agreement of Sales.
Interesting. But I agree with Chris. Most people would let you out of a contract if you lost your job because of unemployment during the process. So, yeah.
So if somebody loses their job, just to get back to that question, and there's 2 borrowers on it and one borrower does qualify, yet the other one's lost their house, they can still qualify with just that one income. But if one spouse loses a job and they can't qualify with just the one income, then you would have an issue with giving them an approval for that loan, right?
Yeah. And one thing that we should potentially point out here is lenders are going to verify that you still have a job prior to closing on your loan. So even if you did have a job and even if you did qualify, and during the process of the transaction in the 30 days, 45 days, or however long it takes you to close on the home, if something changed, if you were furloughed or if you were closed and laid off or lost your job, or even if your income decreases, you need to contact your lender immediately to let them know that information, because it could affect you qualifying to buy that home.
Right. So I think that most mortgage companies usually checked within 10 days of closing. And right now they're checking within 24 hours of closing to make sure for a refinance or a purchase, to make sure that you still have the job that you said you had on your initial application.
Correct.
So that's a really, really important point. Somebody just actually texted me and asked me, what do we all think interest rates are going to do in the next 30 to 60 days? If we all had a glass ball, we wouldn't be selling mortgages.
I'd be on the beach somewhere for sure.
Well, you are virtually at a beach. You decided to live there all the time. Actually, I think I'm the only one that's not as within an hours of a beach is me. So go ahead, guys.
So, you know, it's the same old question when it comes to interest rates. You know, nobody's got a crystal ball. And the things that have happened with the economy over the last month are sort of an immediate effect on the market and how it changes. So things are crazy. So in any one day, rates can go up, rates can come down. So in a period of 30 days, 60 days, or in the next 3 or 4 months, we have no idea really what they're going to do. A lot of the economists are saying that we're probably going to have low rates for quite some time to stimulate the economy, to get us back on track, to get us going. But you know, I have a famous saying that I say to all my clients when they ask me the question, should I lock? And my answer is, pigs get fat, hogs get slaughtered. Because I'm not good at picking stocks. If I think I'm going to buy a particular share or stock in a company, and I think, oh, I'll wait till tomorrow, I know it's going to cost me more tomorrow than it did today. And it's the same with interest rates. If you are happy with the interest and the payment that you're going to make on your mortgage, and if it's something that you feel comfortable with, get yourself locked in on that rate.
So with the new guidelines that we all have in our different mortgage companies, you're really not able to lock until you have a conditional approval right now, without paying some sort of possible premium. So you would probably say the same thing, get your mortgage application in, and then once approved, we'll discuss getting you locked into an interest rate. Is that what everyone's saying right now?
Yeah, I mean, we're pretty much playing the interest rate game. It's,
right.
Are you ready now, or do you want to hold off and wait? And I mean, we've got people that are waiting. Some people are like, let's just get it done. It's a game that I've never played before in the mortgage industry, but it's definitely keeping me on my toes.
Right, right.
I think it's also important to know too, though, to educate the consumer, is there is a difference between guaranteeing you a rate 60 days from now and guaranteeing you a rate 30 days from now or even 15 days from now. So if we go ahead and begin the process and we get you in the pipeline and get you underwritten, if I can then turn to you, say, I got an appraisal waiver, or I've got you approved with your conditions and everything is ready to roll. All I need is for you to update this bank statement and dot that I and cross that T, and then we can close you. Well, then that means I can get you the best pricing for that interest rate for that day because we've already done all the work. So the
Exactly.
conversation is a little different, that if I can close you in a couple of weeks compared to 6 weeks, we're going to get the best deal on the market. So I think beginning the process of putting your loan application online, you know, while you watch The Voice at night, and take your iPhone and scan a W-2 or two and upload it into, you know, the portal and all of that fun stuff. It's well worth the 30 minutes to 45 minutes for you to do that stuff, so that we can go ahead and get you ready to roll and get you in the pipeline. You're underwritten, and then when those rates come out for that day and we've got you ready to roll, lock you and close you.
I think you're absolutely right there, John. And for me, I'm working on an urgency factor.
Yes.
You never know what the rates are going to do. So I'm saying to my clients, hey, let's get all your paperwork in. Let's gather your documentation. Let's get you in the system. Like John said, let's get you in the pipeline to an underwriter. Let's get you underwritten. Once we've got that stage, we can lock your rate in. And if you like what you see, we can pull the trigger that very day. So let's not wait. So people are understanding the urgency a little bit more to get the documents into me, and that way I can get them through our system.
So all in all, what I'm understanding, and I agree, but short-term interest rates, economists can kind of see what's going to happen in the world over the next couple of weeks, or it's not as unknown, right? Because so there's less risk in short-term interest rates. So the pricing or the interest rates are better for short-term locks than they are for long-term, because none of us really know, or no economist has ever dealt with coronavirus or anything else like that. We don't know what 60 days out looks like, which is why those longer lock terms are definitely way more expensive than the shorter lock terms, right?
Right.
Yes.
Exactly. So a lot of people are hearing that we're going to go into paying points, and we can always already see that on a 60-day lock, paying some sort of premium for the 60-day lock. Do you believe that, or do you foresee that we're going to, because everyone doesn't know what the future holds, that the investors are going to want their money up front because they're worried about refinances, they're worried about unemployment, they're worried about the forbearance. They don't want to, it's risky to take mortgages right now. Do you think we're going to see everybody wanting their upfront money and therefore we'll have to charge points?
I think it's more than just the risk. I also think it's just a pure liquidity issue right now.
And the liquidity issue, yeah.
You know, the money's not out there at the moment because so much of it was already guaranteed. I think once the Fed pumped a lot of money into the mortgage-backed securities, and I don't want to get too into the economy part of it or whatever, the timing just happened to be this awful perfect storm of guaranteeing money that we don't know whether or not it's going to close or not.
I think somebody said even if Stephen King was going to write a novel, he couldn't have written one as well as this.
No,
it was a perfect storm.
No, it's just this crazy one, like it was just an onion. One time we peeled one problem, another problem was there waiting for us when it came to, you know, pumping money into a market where the unemployment rate was, you know, going higher than they could even imagine. So I think the risk, yes, is there. So yeah, there could be a premium up front for a 60-day lock, but I think, you know, it's kind of twofold. I mean, are the rates really going to go up in a market like this? I mean, I'd be on the beach right there with you, Kristin, if I could tell the future, but technically the rates are supposed to be a lot lower than they are right now. So, you know, it's kind of, you know, we're all kind of waiting and seeing what will rates do a month or 2 months from now. I'm not willing to take that chance. I want to go and get in and get processed and underwritten so that I can go ahead and get it done.
Right. So, and anything in the threes is fantastic. I mean, historically speaking, we're very, very, very low right now. And it's a great time for people to purchase, for people to refinance. Before all of this COVID-19 happened, we were having a great housing market. And that will put us in a great situation once all of this is figured out. And we'll be able to get right back to rolling with the punches. But I think what everyone really wants to know and needs to know is that every one of us is here for them to help them with whatever financial issues or opportunities they might have. And call your mortgage person in whatever area that you're in and get your financial health situated so that you can be in the best financial situation for when we come out of this. And now's the time to strike. So would you guys all agree on that?
Absolutely.
Yes.
Last words for anybody. Any questions that you think that we didn't hit that the consumer might want to know?
Obviously, I think when we distribute this this video to different people via social media, via our networks, for each of us, you know, feel free to reach out and ask your own specific question, because everybody's question will be slightly different. Everybody will have a question that's important to them. So I just want to say to the people who see me on this video, who I send it to, feel free. I'm here for you. I'm your trusted advisor. I'm your friend in the mortgage industry. I'm your mortgage resource. I'd love to be able to just answer any questions that you may have.
One last question that I think a lot of people want to hear, because I think I heard Fed Chair Yellen say today that the unemployment rate today is roughly 12%, right? I don't know how much truth is to that. I can just tell you what the unemployment numbers were claimed for the last couple of weeks. But with that being said, obviously mortgage deferment, mortgage forbearance, with the CARE Act and the government stimulus is definitely being talked about. If somebody still has their job, Sue, or maybe somebody has lost their job, but they've been able to, you know, save. I think I've always been told my whole life to somehow figure out a way to have 6 months reserves. Gosh forbid something happens, then you have it to fall back on. If somebody has their job or has the reserve, should they be making their mortgage payment through this, or is it kind of free money from the government? Because that's what I'm hearing a lot of people are thinking that the CARE Act is referring to.
Yeah, so if you are in hardship, you should definitely call your servicer and ask about a forbearance. Yet, I would say that we don't know what the ramifications of that forbearance are going to be if you plan to purchase a house or refinance in the next 12 months, because you do need to substantiate a 12-month history of current mortgage payments. And if you're in forbearance, you won't be able to do that. So it won't negatively affect your credit, but it might negatively affect what you're able to take the next steps to purchasing a house or refinancing. So you really want to look at both options, and really, if you can pay your mortgage, you want to pay your mortgage. That is the best thing to do, is to pay your mortgage if you have that money to pay, in my opinion. So I would never tell anyone to, you know, not put food on the table to pay a mortgage, but or do what's best for your family. But I would say we don't know the effects of what this forbearance is going to be, because forbearance is not forgiveness. Every servicer is going to do it differently, because there is not really any guideline on how each servicer is going to do this or what requirements you need. You really don't need any requirements. So it will be interesting to see how the next couple of months play out. Totally great question. So
yeah, I would definitely agree with you on that, Sue. And you know, forbearance really needs to be, you have no other choice. You're putting food on the table or you're making your mortgage payment. Forbearance is very different than forgiveness. Understand the difference. And when your servicer does talk to you about what the plan is or what they have laid out for you, get it in writing and really have that documented so that you can protect yourself, because that money will come due. That money it will not go away. You are basically just putting it off to get through COVID-19, and you could hurt yourself more than you could help yourself by doing it. So don't take advantage of the situation because you can use it because you have no other choice. That's my advice. You know, if I had to make the choice between food and my mortgage, it would definitely be food. But if I could do both, I will definitely continue making my mortgage payment in this time right now.
Agreed.
I agree with everything everybody said there. You know, it's so easy if you think you've got loopholes in the system or something that makes it easier not to pay one bill a month. But I would just agree with everybody. And Big John hit the nail on the head. Make sure that whatever you hear from your servicer, and when we say the word servicer, maybe you're thinking that's a technical term. That's the person who you your mortgage payment to. Make sure that when you call them, if you're having to do a forbearance and have maybe 2 to 6 months off paying your mortgage, make sure you get absolutely documented in writing how much it is, when's it expected to be paid back, because as John said, you are going to have to pay it back. We don't know if your company may require you at the end of, let's say you choose a 4-month forbearance, and at the end of 4 months, they might say, okay, you owe us now those 4 months that you just missed, plus your mortgage payment for this month to get back to start again. If you don't make those 5 at that one time, you may then go into arrears in your mortgage and foreclosure could be started, etc. I don't know. We don't know what your mortgage company will say. So make sure that you totally understand and get that in writing, in black and white. If you don't understand it, get with somebody who does understand it and can read through that for you and give you some advice.
Perfect.
But the government said that I could. Well,
Just because you can doesn't mean you should.
that's right.
I've said that several times. This is prompting. I have one other question that I think our self-employed borrowers of the world
For sure.
might want to hear. So obviously, Craig, when we are, if somebody works for Disney per se, it's clearly known that I know as of April 19th, none of them are going to have a job. So it's pretty easy when somebody works for a company. We can pick up the phone and call them to see if they're still employed when we're doing our final verifications of employment. But what's changed for self-employed borrowers? Because it's not as easy to verify or show if something's stopped. So what are we doing in the industry to help combat that, to make sure that their income is the same as what we're underwriting and approving?
Sure.
I think there's some fiduciary. Sorry, Big John, I didn't mean to interrupt. Sure.
There's a slight lag on this. So it's my understanding with self-employed people that we are doing our own verification as to whether that business is viable at this time or not. So if you are somebody that makes your living by going into people's houses, maybe a house cleaner, I'm just throwing that out. Well, maybe your business is not as viable at this time as it was before. Maybe it's more viable. And if you can prove that, if you can get customers to verify that, I'm sure that would be how we verified it. But I'm sure you guys have got other examples.
Or
John,
a daycare center.
Daycare center, perfect.
So,
Yes.
I mean, there's some that are pretty obvious, right? So most restaurants, they're just doing takeout, so their income's probably a little bit different. And I haven't had any restaurant employees, but there are some that are borderline, because our house cleaner actually came today. So I still have my house cleaner coming with 3 kids at home. There's no way I could keep up. So there are, there's some businesses that are going to be a little iffy. But one question I'm also getting, so I think we're getting a letter written by the borrowers, right, guys, at least for the most part, if they're self-employed, stating how COVID-19 has affected or not affected their business.
Correct.
But one other thing, so in that letter, obviously what we're wanting to see is that COVID-19 hasn't really affected their business. Or if it has, it's been very minor, so it wouldn't affect the ability to repay that mortgage. But what if we start seeing inquiries from, say, Bank of America for a small business taking out one of those SBA payroll protection loans, or the other loans that are available to small businesses out there? Could that hinder the underwriting of the mortgage process if we see we're trying to take a government loan that's afforded to us, kind of like the deferment, right? Everybody's eligible, but we're kind of telling the government that it's not affecting our business, but it is affecting our business, but we're telling the mortgage company it's not. Could there be a contradiction in underwriting that you see coming up because of all those SBA loans?
Good question.
I mean, Kristin, I don't want to get on a high horse, but I do think you could see a contradiction on it. But at the same time, I think we as loan officers have a fiduciary responsibility to make sure that when one of our clients closes on a loan, especially the first payment, is being made. We want, any home that we sell that's 150,000, what I'm hoping is in 10 years, they're going to come back to me and buy a $400,000 house. So I don't want to set them up where there's no success in the deal. I think this economy is temporary. I think for what we're going to be going through, I think we're going to bounce back and people are going to start going back to work again. I think we're going to limp back going back to work again, but I think we're going to get back to where we need to go. But I think you hit the nail on the head. I think there are signs where a lot of our self-employed people, I personally had a client that was pre-qualified and she sold salon products. That's what she does. Is she sells salon products to all of the different salons in our market. And she obviously, nobody's buying any salon products right now. So she asked me, am I still qualified? And I'm like, well, technically you are, because you did your 2019 tax return, and I might need a P&L, but are you in business right now? She goes, no. And I said, well, maybe the timing is not really good right now. Maybe we should hold off buying a house until it's time for you till you start making some income again. And I hate it, but at the same time, if I put her in a house and salons are not back to work in May or June, then hell, I'll probably have to pay for that loan anyway because she won't be making those payments. And then I set her up for disaster for the next 6 months. So I think there's going to be some fiduciary responsibility on the front end. We're the first line of whether or not someone can buy a home. But I do think also when you start seeing inquiries from loans that are protecting them for the next few months, I don't know if it's a sign of weakness, but it's definitely a red flag that we need to verify to make sure that they are in a position to buy a home.
Perfect.
Mm-hmm.
So, that a really great question. And I do think it's going to make us all better loan officers when all this is said and done.
Yeah, I think that we're all just going to figure out the tide and the waters on all this to make sure that we're doing the best things that we possibly can for our customers and our company. And I really appreciate all of you getting together today and just really showing your expertise in the field. And as Craig said, if anyone has any questions, you can reach out to any of us individually or give us a call, and maybe we'll do this again. So send your questions in, because we are definitely here to help everyone either purchase or refinance and be financially healthy in this crazy environment that we're living in today.